If one spouse dies, what is the tax going to be?
You have to have that in the back of your mind. And that is a factor in doing Roth conversions.
You found us, folks. Show's called Your Money, Your Wealth. Joey Anderson here. I'm a certified financial planner with Big Al Clopine. He is a CPA. I blew your ears out there.
You did. You went from your inside voice to your outside voice, just like that.
And that's what happens when the red light goes on. We're here to answer any money questions that you got. So go to yourmoneyyourwealth.com. Don't click on the button because it probably doesn't work. You're just going to have to figure out how to get the questions to us. Or you can leave a voicemail like this guy did.
Kevin managed to figure out how to do it. Here you go.
Hi, Joe and Al. My question is kind of a philosophy question when planning for retirement and tax rates. Whether or not the tax, you think in the future the tax is going to be lower or higher, sometimes as a married couple, do you consider usually the tax rate of the married couple? Maybe if one of you dies early, what's the tax rate going to be as a single person? So you might be planning to say our taxable income be $80,000 a year as a couple, 12% tax rate. One of you dies, boom, that all of a sudden shoots up to 22%. Just what's your philosophy on that?
Philosophy.
Yeah.
Philosophy on death.
Yeah.
And tax rates.
Death and tax. Yeah. That's death and taxes. Can't avoid that.
Yeah. Well, I don't know if it's philosophy, but it's a planning mechanism. And I think he's right on it. It's called a widow's tax is what he's referring to.
Exactly.
And so when you have, let's say, retirement accounts that you have required distributions, maybe it's a pension, maybe it's whatever fixed income that you have. And what he's saying, it's $80,000 as a married couple. Well, I'm in the 12% tax bracket. But if one spouses die and I still have that $80,000 of fixed income, I'm going to shoot myself up into a lot higher tax bracket.
Yeah.
And yeah, we definitely want to look at that for sure. I mean, if someone has impaired life expectancy, or if they don't, I mean, if someone has a really large retirement account, those are some of the aspects that you look at. If it goes to the next generation, what are the kids or the grandkids, whoever the money's going to go to, what is their tax rate? So there's multiple things that you want to be looking at in a well thought out, comprehensive strategy.
Yeah. And, we talk about Roth conversions. Sometimes
we do
on this show. It's come up, and I would say my philosophy. So I use that word because Kevin brought it up. My philosophy is to plan based upon current tax rates or known changes in tax rates. Like we know the tax rates are going to go up in 2026. Could it change between now and then? Of course, but that's what we know. And you plan on your tax rate right now as a married couple. That being said, you have to have that in the back of your mind, and that is a factor in doing Roth conversions, particularly if you think one has impaired life expectancy versus another one,
or maybe one is a lot older.
Yeah, or one's a lot older. Yeah, exactly. And so then it's like, well, that makes Roth conversions even that much more important, because right now for the first several brackets, the single rate, the single, there's the same rates, 12%, 22, 24. But it takes twice as much income to get there as a married couple versus single. So when one spouse dies, you're going to be in a higher tax bracket.
Yeah. So I mean, it's double, right? So 80,000 roughly is the top of the 12, and 40,000 is the top of the 12 for single.
Yeah, and that happens for the next two brackets. After when you get to the highest brackets, it's not quite double anymore. But the point is that you're going to pay more tax as a single taxpayer than married in most cases if you have basically the same income. Yeah.
And if someone has, we've done like, I hate to say it this way, but like deathbed type Roth conversions. Someone is terminally ill and it's like, all right, well, what's going to happen to the widow when they inherit the money? So there's all sorts of different things that you want to look at. But I think you start with, if you're married, what's the tax rate now? What's the tax rate in the future? And then you kind of take a look at your core strategy there. And then from there, you take, I guess, more layers off the onion.
Yeah. And sometimes, so this is maybe not quite the same, but maybe related, which is in certain cases, like if one spouse dies and there's a big life insurance premium or something like that, or there's a huge step up in basis, so that surviving spouse on some levels will be better off. but I never like to make that our core. I never like to have death as be like the core plan. I mean, it's something to be aware of, and this is the same with this. It's something to be aware of, and it makes it even that much more important, maybe, to consider Roth conversion, but it shouldn't be part of your core strategy.
All right. Thanks for the question.
Are you prepared for retirement? Schedule a free financial assessment with an experienced financial professional right online at purefinancial.com.